Hi there. Welcome to our next episode of the podcast, Traction Talks. Today, I'm joined by Chad Davis to discuss the people element of EOS. So, Chad, tell us a little bit about yourself.
The boring part. My name's Chad Davis. I'm from Canada, and we started a firm back in 2012 called LiveCA, and I've had a lot of fun with it. But arguably, there's always issues that pop up, and there's always something you're trying to fix. So EOS was a big part of our journey over the last few years, which is why we're here today, obviously. But we went through some pretty dramatic changes. I also am a CPA, did the MBA thing, and also live with my family, kind of traveling around North America in an RV. So we do 6 months in Canada, 6 months in the US. And then hopefully one day we track over to Europe or the UK or something and do a little bit more over there. That's the end goal. But that's me in a nutshell. How about you?
So you're living a bit of a remote business then, is that right?
Yeah, we've been remote since we started in 2012, 2013, and I've never really had an office. So grew that up to about 120 people. And then through EOS and through economic issues and mistakes, we ended up sort of optimizing the firm to about 60 people. And that's a whole other story. But EOS played a major part in deciding what size firm to sort of work towards and what works for us. So that's great. And for the people that don't know you, what's a little bit about you?
Yeah, so I run an accountancy firm in the UK called Stride. So we're also adopters of EOS. Equally, also, we run our business remotely. So really interesting to see EOS in remote businesses, because I think it's almost more important in a remote business to really nail that down, I think. So it's quite interesting. I want to really delve into that a little bit later, if that's okay. So tell me a bit then, so what was your entry point into EOS and what first sort of gave you the excitement about EOS, specifically around when you first started using it?
I mean, is anybody really excited to try something new? Like maybe tech sometimes. It may be something that might make you more money in terms of sales, but like a framework for a business, I don't know about you, but I felt like it was kind of I won't say dodgy. That's a UK term, right? But there's a little bit of a cultiness that you kind of think when people start talking about it and you see all the trademarks and you're like, oh, what are we getting ourselves into? Is this really going to affect us in a positive way? So to be honest, I didn't have very many positive outlooks on the program or the framework when I was doing initial research. But what was kind of funny is that we knew we had issues, and my business partner was looking into things and asking people about things. I was doing this at the exact same time independently. And around the same week or two, we had both kind of thrown each other links of EOS saying, hey, is this something we should probably think about? And his name's Josh Swag, and we've been together as business partners ever since the beginning. And it was just kind of funny that after all those years, the two of us kind of still came together and thought maybe this is something we should look into. What's your story?
So,
Yeah,
it's interesting. I'm an avid reader, so mine came just simply through reading Traction and going, this makes complete sense. It makes sense, and it seems so obvious when you read it. It seems like there's nothing crazy about it. There's nothing sort of magical about it. It just makes sense to kind of create organization amongst the chaos of a small business, I guess. And, for those people who don't know what EOS is then, or specifically we're going to focus obviously on the people part, how would you describe your view of what does this people part mean to somebody that's looking at this?
Well, the people part, I guess it just emphasizes how important the right people in the right seats are. And you'll hear that term through EOS all the time. But it's essentially just building up a team of people that align with your company's core values. Like you said, it's a very simple concept. Have core values that make sense and that you live by, and then make sure that the people that are with you in the company also believe and can and want to work all amongst those core values. Everything around that is EOS, but in its simplest form, that's what I think the people section's about. What about you?
Yeah, do you know what it is? I think it's the terms right people, right seats became really, really powerful for me in terms of understanding that somebody isn't necessarily wrong or they're not necessarily not a bad person or bad member of staff. They just might not be the right person in the right seat at that moment in time. And I think that's really valuable to, especially somebody like myself, I'm a nice, or I have been traditionally a nice person. I think I'm learning to be less nice and more kind, which I think are two interestingly different things. And I think that whole right person, right seats allows you to really go, what's the kind thing to do in situations? What's the right thing to do, rather than the nice thing to do, especially if you're very much innately driven by what people perceive about you, which I think I am. And these are things you try and get away from and move towards more productive sort of mindsets.
I'll also add, though, that there's also a negative to this. Like, if you get it wrong, there's a chance that you really make bigger mistakes, right? So it doesn't matter if you have great strategies, or if you're a smart person, or if you're charismatic. If you don't have the right people in the right seats, you ultimately have misalignment. And that misalignment can lead to inefficiencies, low engagement, all the things you see when people aren't in the right seats and the right people aren't there. And that ultimately is what slows down or causes other people to leave, which is a massive, massive issue in companies that are based on human knowledge.
So let's use that right person, right seats idea. And let's just talk a bit about that then, Chad, for the people that perhaps don't understand the context of, let's touch on two things. Maybe you can explain your understanding of them, which is the accountability chart, which is one of the tools that EOS use, and maybe the People Analyser as well as part of that.
Sure. So quick definition, like, what is right people and right seats, and why are they different? Right people is all about the people that share your values, point blank, right? They're the ones that want to contribute to the company with the culture you're building and the direction you're building it in. The right seats is more about deciding if person's skills and capabilities and desires are all contributing really well to the actual company itself in the position that they're in. So if you have alignment in both, you're good. Did I miss anything there?
No, I think that's fantastic, actually, because I've never heard it broken down into those two things. It's sort of the distinction between one almost being sort of led by the values and the individual's characteristics, I guess, or whether they're living the business's desired characteristics, and one more about the competencies and skill-based side of things. But I quite like that. No, I think that's really valuable. And I guess that lends itself really nicely to the sort of pushing the GWC, the get it, want it capacity to do it idea that comes in the People Analyser, into that right person side of that.
It's very true. And we're talking super nerdy about stuff in the book. So we can talk about the books in a second, but you're right. Some of these books are a heavy read. And at some point in this podcast, it'd be nice to talk about the 5 books that exist and which ones are for which people. I know I'm digging myself a little hole here by saying, why don't I just talk about it now? So I probably should.
Chad, in our first episode, we've covered a little bit around it. So hopefully that's going to, we've taken, hopefully it's not completely brand new. And if it is for anyone, if you're listening here and this is completely brand new, then if you check out some of our earlier episodes, we do cover some of the, in a bit more summary topics.
Perfect. So you've covered Get a Grip, Rocket Fuel, How to Become a Great Boss, all that stuff. Okay. Amazing. All right. So tools for people. Remember, you have to have the accountability chart completed before you do this work. And you do that because in the People Analyser section, a component of the review is seeing if people have the skills and resources needed to do their job as it relates to the accountability chart. So I know that if you decide to self-implement, maybe you don't do that until after, maybe you change the order up a bit. But for us, it was really important that we did the accountability chart first, think about the company first, and then work on the People Analyser second. Is that how you feel about it too?
Yeah, well, I think naturally, the starting point when you start implementing EOS is to first look at your accountability chart anyway, and to really identify what's required to hit that vision that you're looking for as a business.
Good.
And I think this in the new People book. I said we've covered it, but in the book that came out recently, the EOS's People, I can't remember the full title. They discuss about how if you start with the positions, ignoring who is currently in there at the moment, and you start with the positions, that's your beginning point for implementing this process of going, what should the business look like? Assuming we fired everyone, right? Assuming we fired everyone, what does this look like as a starting point if we went to rehire new people? I think it was quite an interesting one for me to see that and identify that it's not people led, like you said earlier. It's very much position led, and then gives people fit.
Perfect. So really quickly, the People Analyser is one of the first tools they'll use inside of this framework under the people section. So it's nothing more than evaluating people to see if they align with the core values and they can contribute. So it uses this thing called like a simple, yes, maybe, no system classification. And then what you do is you answer that question for each core value that you've identified earlier on. And then once you have that list and you kind of go around with the leadership team answering that, I've seen some people do it where they do it blind and then share their answers. And then some people will all do it together and they're at risk of groupthink. So think about that and the amount of trust that you have to have with your leadership team in the beginning to decide what to do with that. And if it's just yourself, that's cool too. You can answer it, but there is some dynamics there to think about when you're answering this. And then the next section is the actual, what they call GWC framework. And if you're anything like me, you'll forget what GWC stands for halfway through going through EWS 4 times. And then you're always going to look it up, and it stands for gets it, wants it, capacity to do it. And those 3 elements ensure that every team member sort of gets it or understands their role, wants it, right? The desire to actually do well in the role, and then the capacity to do it, which is like the skills and the resources to succeed. What did I miss there?
I think you're spot on. I think it's really interesting that you identified the marking system there as well, which is that kind of, do they live out that value? Yes. Do they, is it a maybe or is it a no? And I think the one thing that you potentially missed is they kind of rated. Is that a plus minus?
That's right.
That's as they do it. Interestingly, I've seen a lot of people that have veered from that sometimes, and sometimes find that a bit more of a challenge to kind of be so blunt on it's a yes or no, or like you say, maybe sometimes. I think that almost gives the rating. Some people go, well, I want kind of like a 4, not a 5, or like a 2, not a 1, not because we're almost trying to be more kind, and actually it forces you to go, are they or are they not living out this value? Are they or do they not get this?
That's right. And like after speaking to a few implementers that have done this, they're like unequivocally on the same page that the first time you do this, you'll find out that you don't have the relationship you think you do with your existing leadership team. And then over the course of time and just being in the system, it generally creates this environment of trust where you can answer these questions more honestly. So don't be sad if you get it wrong or you have a problem. That issue will pop up and eventually be dealt with.
Cool, Chad. I know that this people part is a real. This is really important for you. It's a real passion of yours. So maybe it will be quite nice is for you to just contextualize why that's the case, why you're here on this particular episode, and why it's so important for you.
Let's call it the spade, or call a spade a spade. We were up to 120 people. We were growing. I won't say for the sake of growing, but because the opportunity was in front of itself, and we thought that was what we should be doing. And when you lack that framework that EOS provides, sometimes you don't critically think through that strategy as it relates to everything in the entire business. So for us, we were just growing incredibly fast and had probably gone from about 70 people, 19, we started in 2013, and then just added lots of people all the way through there. And I think a lot of it has to do with the economy and where things were with money at that time. And target clients were always like the $1 million and up businesses. So they were always struggling with this and like sort of needed an outsourced accounting firm that could do that for them. And it was great, but it eventually broke, and it broke for all the reasons that EOS is great at identifying. And what it really taught us was that like the right people in the right seats is really important. Having a business model that makes sense for unit economics, where profit is the goal and not growth percentage is the goal, is absolutely necessary. And just talking to others in the industry, you realize that there's like a dirty little secret that most people hide, which is their true net income margin, like that percentage. And I've talked to people where that's others where it's 5% and they're okay. They're admired. Others that are 50% and hated.
The irony of accountancy firms who don't focus on profitability, they focus on the turnover over profitability or whatever it looks like. It's quite an irony, really, when we all know this stuff, don't we? But sometimes when it's your own business, and we'll tell our clients this stuff, but sometimes when you're looking internal at your own business, you're still, and maybe it's an ego thing, I don't know, maybe it's a comparison thing, maybe it's just because we don't really know, we're all kind of figuring this out as we go along. Maybe at some point we go, is this what we should be doing? And it's only when you realize the impact of that you get that moment, don't you, where you go, actually, you know what, the growth isn't worth it. Or maybe it is, or maybe you need to grow to make it worth it. One of those two things, there's going to be different scenarios.
Yeah. So ultimately, we had found that our business model was what the problem was. So we had wanted to put in this new business model, and my business partner we were in Italy at the time together at this ExpensiCon event, and that was cool. But what also was great was that we were together going through this massive crisis, and we were able to sit in a rental car and kind of drive from the east side of the country over to Rome. And for days, we just talked about the business model. And we realized that this needed a framework to be able to be like put in. And we had already kind of started EOS. We realized that EOS was the vehicle that would allow us to, include everyone and get on the same page, because without it, I don't think we would have been as successful.
Interesting. You've got kind of, I guess we're on a tangent a little bit at the moment, but that VI conversation, that conversation between your two your leaders in the business actually having time, you've almost kind of pointed out another real valuable lesson there, which is that time thing, isn't it? Of just sometimes just being able to be stuck in wasted time, in the car together, where you actually just get to just chew the fat, just talk through this stuff. And, even when you're in that busy mess, whether there's a mess or not, the busyness, sometimes you don't always give yourself that time to do that, do you?
You don't. And when it's virtual, it's way different. So there are some times when you really just need to be in the same room together.
Yeah. So tell me about when you started to implement EOS then, what do you think were the advantages to doing that over, just doing what you were doing originally, or, trying to figure it out, make up your own model, I guess?
Let's call a spade, I can use that term, but let's say it's not a Canadian thing, I swear. So using an implementer.
We have space too, don't worry.
Yeah. Okay. So using an implementer was hands down everything we needed. And I don't want to generalize and say that everyone should use an implementer or you shouldn't, because everybody's situation is different. And implementers are very expensive. So in Canada, they were, $6,000 a day. In the US, sometimes they're a lot more, right? It's not a cheap endeavor. But the value of having an implementer for us was that we had someone to hold us accountable to this system, and it wasn't us. And that was really great, because we got lots wrong in the beginning. We thought we'd be cute and try to do up an accountability chart before the first meeting. And we looked at what we did versus what the implementer guided us through, and it was massively different. And we liked his way better. So there's value in having outside expertise, just like having an outside accountant to help you is also good advice.
So what specifically do you think actually what's the difference? So on those accountability charts, what do you think self-implementing, what's the specifics of self-implementing that you think, was it unconscious bias? Was it, what was it that caused the issue?
And I wonder if this happened to you too. We created the roles on the leadership team level according to what the people that currently existed exhibited. We didn't really think about the roles that the company needed as much as we told ourselves that we did. We tried to look at it through the lens of the people that were here. That was ultimately a bad thing. How about you?
Yeah, so our journey was, we're a smaller team. So our team, we're 8 at the moment. When we first implemented, we were 9. So, not a crazy difference. but very different end of the spectrum, which means when we do the accountability chart, we have people in multiple seats. So I'm both visionary and I'm also sales and marketing. We've got 3 people on our leadership team in terms of in our leadership team meetings, but only 2 sit on our leadership team in the accountability chart. Okay, because they don't fundamentally fulfill that role, but we felt we needed 3 people on the leadership team to ensure we had a tie-break scenario. We don't want to get caught up in 2 of us just agreeing all the time. We wanted to have this triple scenario because I think it adds value to leadership to have at least 3 in that. And so we pulled somebody who's a future leader into that role, who's currently they're not sat in that seat, but they just attend those meetings. So we've had to we self-implemented, and I think that here was my logic at the time. My logic at the time was, implementer, like you say, maybe 40 grand, 50 grand over 2 years. I'll take whoever my current office manager, who's naturally was going to sit into the integrator seat when we reviewed it, put her in the integrator seat. She's going to help implement this process. As she does that, I'm going to free up half of her time, hire somebody lower down to replace that time. So effectively, we're spending the same amount of money, but having hopefully 50% of somebody's wage internal doing the stuff, which on paper seems really logical and really great. And to be honest, I think we've done a pretty good job, but we've been fortunate that my leadership team have been extremely on board with the process and extremely candid about telling me when I've done stuff wrong, and telling somebody, oh, you don't sit in that seat, you're not right. So we've been fortunate in that way. And my integrator is extremely good at just doesn't care what people think. I'll say what needs to be said, which has pros and cons. But in this scenario, for us self-implementing, was a pro. However, when I actually, in hindsight, look backwards and assess the cost to the business of her time and what she could have opportunity cost of what she could have earned doing other stuff, it was probably way cheaper to get an implementer in place. Way cheaper. When you actually look at it fundamentally of what you're doing, I think, which is why, before this we talked a little bit, Chad, this kind of, should you self-implement? And I can see that when you're a small business, it feels like that's the right thing to do. And some people don't have the luxury of having to use an implementer. But I would argue that, and it's what you said, I think, it's just somebody external being able to tell you what to do is going to be really valuable. And ironically, we're in the process at the moment of talking to implementers about whether or not they come back in and do sort of days to come and assess what we've done already and re-nudge us along that journey, because we've seen the value and we're going, well, what took us 3 years probably could have done in 18 months with somebody else. What would the impact of that being? How can we accelerate that now? So it's really, really interesting to see the dynamics.
And then there's also a dynamic in the industry now where a bunch of firms are getting into EOS. And I could see there being small pockets of trusted groups together that are of similar sizes that are able to help each other. And maybe with a little bit more context around accountancy versus the framework. There's pros and cons to that, obviously. But I've been in a few of those groups where there's other EOS members that are similar size to me. And it's fascinating to see how different people structure their accountability charts. And that perspective is sometimes what implementers can't provide.
So I've got a question for you. So I guess it's because I'm not a qualified accountant. I started this business very much as a business leader, but I know that most of the people watching this probably are excellent accountants that have become business leaders through that process and stepped up, a bit like yourself, CPA, stepped up into that role because they've seen that they want to take the benefits of what they're doing. They may have come up through a partner firm in that sort of triangle approach. How do you think EOS works with that sort of traditional, maybe you can highlight if the Canada and the US is the same, but you can have kind of very traditional sort of triangle approach where you've got sort of senior partners and sort of this kind of partnership level where you basically slowly be able to be promoted into a partnership level rather than necessarily based on a seat or something like that.
I don't know if I can answer this well, to be honest. I don't have a lot of experience working in large accounting firms for a long time and being in leadership roles there. And I know that there's different structures and pressures and motivations and things like that exist that just don't in a normal business. So I don't know if I'm the right person to answer that, but all I can say is I have not seen EOS been implemented in a large, partner first traditional firm in a meaningful way. And the closest I've seen is a firm in the US, probably 250 employees, and they ended up treating it like a business, not like that. So they ended up moving away from that traditional partner model because EOS uncovered how much of a disincentivized, business model it was, and they needed to change. So take that what it is. I know it's not a great answer, but it just shows that what is right will typically come to the top, and what is bad will typically start to go down over time. And hopefully we're in that stage of accountancy now where people are just saying like, come on.
I think that's a very diplomatic answer, but I also think underpinning what you said there is there's a lot of wisdom to that. That if you're open to doing what's best for the business as a whole, and you come in with an open mind, and you don't have that preconceptions of what should be in an existing accountancy firm, and you just go, what's the right thing to do here for the whole business? And I think that's what I'm reading into what you're saying there is that, when you come in with that mindset, it doesn't really matter because you're going to make those decisions that as to whether it stays the same, whether it moves, you're going to make the right decisions for the business.
I think so.
Cool. Okay. So what hasn't gone well? What are the challenges that you faced in this people? Because obviously it's not all roses, isn't it? There's definitely some challenges in this process.
No, I'd say EOS is probably the hardest thing that you will do in your business, full stop. It will ruin, break, and test relationships more than any other thing that you've ever done in your business. And that's great, but it's not fun. So what didn't go well? Well, it's funny, like what you think might be a bad thing in hindsight turns out to be a great thing. So I'll use like my own personal example of this because it's my own story, and I think it's worth sharing. It's like I was always like a thinker, right? Coming up with ideas, but like executing and creating documentation and being accountable to getting something done on a deadline, like I would rather not. That's the fun part. So it was really clear that like the company needed that, like the thinker, right? The one that was thinking around like, where are we in 5 years? What is happening in the industry? And like, that was me. So I was overseeing the sales department. I was overseeing our development and product team. I was, the bottleneck for a lot of tech in the company. And now I'm not, because 2 or 3 years later, after EOS is put in, I get to sit in the visionary seat, and there's accurate and proper accountability for every element that I did a bad job with.
How did you, yes, you're putting in the, let's say somebody sits there and said, I've done an accountability chart, I've done the People Analyser, but then it's kind of hit real life. How do you put people in their seats, how do you hold people to account? What's the accountability, physically, how do you hold them to be accountable?
Like every company is different because you can afford different liberties when you're at different stages. So I think the larger you are, the more replaceable someone is. And maybe the smaller you are too, that will highlight some of the bigger issues, and you can start building your company with people that are in the right seats and the right people that you can move on faster. But this graveyard middle of 20 people to 40, for maybe 50 people, like that area is really hard, because when something goes down in terms of a major change, it really does affect a lot of people, and there's not a lot of backup. And there's, as much as you might think a 30 or 40 person accounting firm will have a lot of backup and a lot of things, it's typically not. Maybe in the UK it's different, but in Canada and the US, like there's still chickens with heads running around right at that size.
I think you've highlighted two really interesting points. So one is, so in my experience, when we implemented this, obviously I was sat in the visionary seat, like yourself, Chad, not necessarily somebody who wants to be held accountable, but then I have an integrator in the integrator seat, operations and finance. And when you have that, accountability is a real challenge. So something we've had to do is implement individual separate meetings for each of those roles to split out the accountability, because we try to do it in one meeting. We actually really split it out so the different hats are going on, and have individual accountability in each role. So technically then you could fail somebody in one role or succeed them in one role, or say that, GWC them in one role or not the other role, and kind of remove that human element. That's one thing. And the second thing really, which it seems to be coming up a lot at the moment, I don't know why it is the idea that businesses have certain sizes, it's easier to run at that size. For example, and I don't know the exact numbers on this, but I'm just trying to throw these out there, but maybe like up till sort of 1 to 5 people is quite an easy business model, but between 5 and 10 and kind of moving it beyond that, somewhere between that range, it gets quite difficult because you need to start putting a leadership team in place. And then at that point, you go, okay, between then and sort of 25, it's almost uneconomical to have a business out of a certain range. And it sounds like for you, that's 20 to 40, you think in accountancy firm terms. It's like this, it's almost like there's a bit of a messy period where business is not very profitable, or the leadership team required to support and the outside stuff required to support that business isn't as efficient. At least that's why I'm reading into what you're saying there, or I'm kind of taking from it. But I guess that kind of highlights from an accountability chart perspective the need to sort of almost like go, what would the next stage look like? And almost once you've set that accountability chart at the next stage, it's not a case of adding one seat at a time. You kind of need to grow quickly into that next stage, because you know that between then, here and there, you're going to have the mess, I guess, between that point, and there are going to be people sat in multiple seats and that challenging process. I don't know if that resonates.
It is. And if you bring it back to the book and the actual way that people run this, EOS is designed for companies between 10 and 250 people. That's why it's hard when you have less than 10. And it's probably really hard when you have over 250. I wouldn't know. But to answer your question about the accountability thing, I was just thinking about a better answer. To me, it's having somebody in the integrator seat, which is essentially overseeing all of EOS, that has a coaching mindset. And I wouldn't have had that answer like when we first started, but my business partner is fantastic at coaching, and his role is essentially head coach at the team. He will listen. He will amend his approach. He will make sure that everything's flowing properly. He's the right person for the right seat to be the integrator. We didn't have the right integrator when we started, and it didn't function as well as it does now with him in that seat. So it's just a lesson of like the right person, right seat mantra should always be an issue. If it's an issue, don't hide it, even if it's a long-term issue.
When did you know? So the original integrator was wrong and for the seat, and like, how did that come about, you being able to mold from where you are now to that new integrator? Because I guess if you're saying that people, culture, vision integrator, that they call it, they're sort of the starting point of the whole people point, isn't it? You've got to get those right, because they're going to fundamentally lead that culture and live out those core values.
Yeah, I mean, without getting into any details, it's essentially the results that we were looking for were not occurring, and then you start looking to the right person, right seat mentality. I mean, that's a generic way of talking about it. I think that's respectful and okay right now. But yeah, I think you know, because you're setting your 1-year goals. You're looking at where you want to be, and like when you don't hit that, then you naturally see who's like the head coach and like who's pushing this through.
So what do you think of the lessons you believe you've learned from this then, before we wrap up?
The lessons: trusting the process is hard when there's so much to do. But when you see small incremental changes, it's addicting. And for somebody who's maybe used to starting their own thing like you and building their own business, like there are big swings that you take for certain things like services and pricing and the way you do work and marketing that they're big swings. And you sometimes don't think about it in terms of small steps. Like my biggest learning was that slow, prioritized wins are incredibly more valuable than the big swings that you might be used to taking.
It really reminds me about the whole British cycling marginal gains, and how they went from the laughing stock of the cycling world to some of the the best cyclists in the world simply by making those small marginal gains of like how to wash your hands as a cyclist. Things seem irrelevant, but that stops them being sick. Therefore, that contributes to more training. Therefore, better performance.
Yeah, and look, there's a lot to be said about the whole process, and I hate listening to some like podcasts sometimes where you speak all high level. So like here's the nitty gritty on this one: the long-term and short-term issues. When you prioritize those, the short-term ones, and work through them every week, it is so enlightening to be able to just say, hey, this isn't a priority. We have a process for this. We can move this down to another team. We can address it when it's time. Like that shift in how to work and how to have meetings and how to use a leadership team to solve the most important things was the biggest fundamental learning for me that I wish I would have had when we started, because we'd be in a completely different place.
So what do you think the future looks like for you then, now using EOS?
More of the same, not taking for granted what we have and appreciating that accountancy firms are people businesses, and fundamentally, the interaction of how people work together is more important than what you're selling. And treating people with respect and with, I won't say like just a deep, deep, deep concern and respect for each other is what really drives this. But consequently, we've on the front of our website, like we are actively pushing that, like we are not outsourcing a single position, right? We are 100% Canadian. This is like when you hire us, you're hiring essentially a local team that is there with you in the trenches. And regardless of how you feel about outsourcing, because it's so popular around the world and it's probably the best business decision you can make, we're leaning in towards the people part because we've been burned by not respecting that as much as we should have, even though we thought we were.
It's really interesting. So we've got some of our team in India at the moment, and we've got another member of our team who, because we're a remote business, he's just been testing out whether Italy is a good place to work from and moving out there. So it's interesting you say that, because I think we have been burnt by outsourcing as well. Whereas I think we use the term offshoring as an alternative. We found that as long as you're doing the same stuff on EOS, we have found that it can work quite well. But you definitely need to have the right relationship with the offshoring company to be able to say this employee is our employee. So if they take time off, they've got to speak to us. If they, I appreciate you've got your appraisal process that you go through, but they have to be placed based on our appraisal process. This is the model that we're working on, our success metrics. I think there's quite you can't let them lead that relationship. You've really got to say this is how this relationship is going to look for it to work for us. But I definitely get how that could be an easy burn.
Yeah, and it's not to say that there's one right way or wrong way. Like I feel like the biggest disservice that you can do to your team is living somewhere in the middle and not standing for something. And when you're clear about your model and what progression looks like and what the types of clients are that you're going to look like and what does the work look like, people will choose to work with you or they will choose not to. But as long as you're confident and the people around you are confident that what you're building is enjoyable and what people want and fits within the model, cool. And that's why there's hundreds of thousands of different accounting firms out there with just as many weird little business models that work for them. And we don't all have to be the same.
I think that's actually very powerful. And I guess in EOS terms, that's having different vision and traction organizers that actually make sure that you've got a really clear core values, as you've discussed there. What are your values your business is using, and sort of what are the key what's your niche you're working in, what's your key sort of focus that you're going to have as a business. So being really comfortable with that. I think it's excuse me, EOS has definitely helped us on that journey of being able to go almost, you think your niche, and then you realize you can go more niche, and then you can realize you can go more niche until you get to a point where you go, actually, that's where both for the client's benefit and our benefit it works, but also for the staff's benefit, because it's where that's going to work for them as well. And the kind of culture we're creating, that's the right type of client to deal with that culture, to work in that culture, isn't it? Very interesting. So I'm trying to think of how we're going to summarize this up, Chad. So what would you say if somebody was looking at implementing EOS, they are either thinking about implementing it or maybe just starting that journey? What kind of top sort of tips from today or from your own thing would you say, here's where to begin, here's how to start this process?
Lean into an AI brainstorming session, right? You don't need to hire an implementer to decide if you want an implementer, if you want EOS. Maybe one of the coolest things you could do is just turn on advanced voice mode right now in ChatGPT. Make sure you've got a nice big pro plan and talk to them. Talk about your issues, talk about what you want to get out of it, prime it up with a whole bunch of like great EOS content, and have it critically ask you questions and provide answers that will decide if this is right for you. I mean, everybody's situation is different. And no matter what books you read or YouTube videos you read, they're all podcasts you're listening to. They're all coming from a place of some sort of confirmation bias of what they've already lived. AI will not be that. As much as we want to say it doesn't have it, but you might have a great conversation just by that. I don't know. What do you think?
Do you know, it's fascinating. I've never actually heard somebody talk about trying to articulate problems and have AI challenge you and sort of help you come to a solution to that problem. You always go to a mentor or a business partner or a confidant to talk about that. But I guess what I've just taken from that, which I was going to ask you, why that and why not a person? I guess it's confirmation bias, isn't it? There's some sort of bias in that process, whereas depending on how the AI is set up, you'd hope that isn't going to be biased. That's quite a unique scenario. I'm not sure there's that many people that are going to be doing that, talking to AI.
Maybe they should.
Yeah, absolutely. It's definitely something I'm going to give a try. Absolutely. So just to kind of summarize what we've gone through today. So we've obviously talked about the people element of EOS, and Chad's kind of talked through the accountability chart and the People Analyser. Obviously, look, Chad, I don't know whether you're comfortable with people connecting with you on LinkedIn, if this is something they're interested in, or chatting with you about this at all. I don't know if you're comfortable with that, but it's definitely something that if you want to contact me, welcome to connect with my LinkedIn, but definitely for UK-based people, and we can chat through that if you want. In our next episode, we'll be talking about data. And please, if you haven't already, please subscribe to the Traction Talks podcast. For now, Chad, thank you so much for your time. It's been absolutely fascinating listening to your story and lovely to hear the journey you've been on and some impressive stuff that you've achieved there.
Really nice to meet you, and I hope this isn't the last time. Thanks for having me on, and until next time.